So what are we looking at for next year in 2026 with gold? Well, Goldman Sachs, and I quote Goldman Sachs because if we look at the last 2 to 3 years of projections, Goldman Sachs has been the number one bank in projecting gold and silver prices. They've been the most aggressive, actually. And so Goldman is calling for a move of $5,000 in gold by the end of 2026, roughly a return of 25% from where we are right now. JP Morgan, they're echoing the sentiment, right? They're projecting what they call a triple crown. They're calling for gold to remain as the top performing commodity for a third year in a row. That's this year, actually. When we look at it, it looks like silver's actually going to overtake it. Now, the other thing I do want to emphasize, right, in Goldman calling for $5,000 gold, Goldman originally forecasted $3,500 gold in 2025 when all the other banks were projecting $3,000 to $3,200. Goldman amended that projection in the middle of the summer when it was clear we would get rate cuts to a range of $3,600 to $3,800. As you can see from looking at the market right now, we are already a few $100s above their projection, and I'm expecting a similar occurrence for next year. Now, the main reason you'll see that they highlight for this in gold is the devaluation of the US dollar and the move away from holding US currency and US treasuries by global central banks. Now, what are we seeing on the charts for gold? This chart is more of a macro aspect, and this is something that I really want to emphasize to everybody because the Elliott wave theory here is a fantastic tool to project moves. Okay, you'll see here we've had E wave, the Elliott wave A, that occurred from roughly 2001, and that occurred up until the year 2011. We had consolidation through wave B before we entered into post-pandemic wave C that took us up to where we are right now. Now, aside from the Elliott wave theory, and before I delve down into this, one thing that I do want to highlight, what you're seeing on a multi-year thing here with the blue, the two S's in the circles and the H that's in the circle here, that is highlighting a head and shoulders pattern, okay? Again, this is a technical tool on a chart that can be used to look at anything on the chart, whether it's a stock, whether it's a commodity, no matter what it is. The head and shoulders pattern can be bullish or bearish. Which one it is dependent on the location of the head. So what you'll notice in this case is the shoulders on both sides are above the head. That is an indication of a bullish head and shoulders, which you'll notice is immediately followed by a major move in gold here from the level of 2000 up until the level of 4400 with a couple retracements along the way. Now, what's the opposite of this in the head and shoulders when we see that it's a bearish signal? Well, simply put, instead of the head being located here below the shoulders, we would see it at the same level or above the shoulders. And what that would indicate, aside from just a head and shoulders, is a triple top. That's where it would be bearish. But now, delving into Elliott wave theory here, what we're looking at currently and what this stipulates as we expand on this theory, the current move forward in gold is $900 in the bullish rally, and that's what we're seeing on the chart. To confirm that this fits the metric that we're suggesting, the consolidation, or rather the contraction from the rally, has to be roughly 32% of what was the total gained. And so in gold, what you'll see is that means if you're $900 up, you're looking at roughly $300 in consolidation before you resume the $900 up. And so what you'll see on this chart, the last move that was made $900 from a period of roughly $3,500 up into a period of roughly $4,400. We then saw 32% consolidation back to a level of roughly $3,900, $4,000. Now, we've since seen gold, and you'll see this is echoed in the bull flag pattern that slides over here. The next move for gold will be the further $900 up. And so what we see then is we see gold moving to $4,800 before it retraces its steps into the area of $4,400, $4,500. And that's when it'll make its next move up to 5,000 where the banks project it. Ultimately, you'll see the next move at wave D is what we're going to see just below 5,000. And wave E is really what's going to take us above that level.